Welcome to today's video, and in this episode I'll be talking to us about trading psychology, which is a very critical topic in the trading industry and yet very underrated. Many traders believe that success in trading comes from a perfect strategy, but that is not the case because mindset plays a very important role when it comes to trading. In this video, you'll be learning how to manage your emotions, how to stay disciplined, and how to scale up your trading and being profitable. So stay tuned and stay to the end of the video. Like, subscribe, and share the video if you find value in it. And let's go in depth. Now you've heard the word that for you to be profitable in trading, you have to kill your emotions. You have to trade without emotions. You have to be a trader that does not have emotions. But the real fact is that we are humans, and as humans, we have emotions. Yeah, we have emotions, and we cannot deny the fact that we have emotions. So what you need to do is to tame your emotions. Now, one of the emotions that we face as traders is the fear. Yes, fear. The fear of missing out on trades, fear of losing, and also fear of pulling the trigger. Now, the fear of missing out on trades makes you want to take any trade, every trade, because you don't want to be left out of a trade or a price swing or a very bullish move, bearish move, or a very strong trend. You don't want to be left out, so you just click, 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 click to pursue and to chase the trade. Meanwhile, you might be entering at the point of reversal, so trade goes against you. Immediately you're entering the trade. It's like the market was waiting for you to enter. Nah, it was you who caused it. Fear of taking a trade. Of course, you know that yes, forex trading has a level of risk, and you should have it in mind that you are going to lose money. Of course, you will. So your perfect strategy will make you feel like you are not going to lose any money. But come on, we make losses in the industry. So once you've made up your mind that this is the money I'm willing to risk on a particular trade, this is what I'm willing to sacrifice on this trade, then you should just sacrifice it, because without that risk factor, you have no profit factor to come about with. So having that in mind that you're going to risk this amount will give you that peace of mind to just risk it. But where traders have problem is they are willing to risk, or they are willing to win more and risk less, and it's not done that way. So you're willing to risk $10 on a trade to get $500. Come on, come on. So you are trying to do 1:1,000, 1:1,000,000, 1:5,000 because you've seen people flip accounts online and you feel it is very, very possible. Of course it is, but it takes time and progress, right? You have to grow into that trader. So, but as a beginner trader, you don't need that. And also you have a fear of pulling the trigger. So you might see the trade entering your point of interest, but because it is come with a momentum that you feel it will take you out, you're not even entering the trade. You're like, no, 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 yes, 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 no, no, no. And then you miss out on that entry. We also have greed. Every human is selfish. Every human has a tendency of being selfish. So we have this greediness component inside of us that wants us to accumulate more, make more, and not risk anything, right? So because you are greedy, you want to what? Take everything from the market, not just a portion, not just a ratio, but you want everything all to yourself. So you hold on to trade profit for so long with the hope of getting more. So if I'm a trade and I'm risking $5 and I've gotten $20 on this trade, I'll be like, nah, it's still going to this point, it's going to this point, and I want to make 500 from that trade. You can, of course, but you don't see it happening every time. So you should learn to manage your greed. So have a risk to reward ratio that helps you say, okay, after this and that, I'm out of the market. So many a times when we are greedy, we hold on to a trade so long that it reverses and hit us and take us out of the market. That's happened many times to you, I know. So why still do that? That is not profitable to you. So insanity is doing the same thing over time and expecting a different result, right? Now we also have this emotion called hope. Hope is never a strategy in the forex market, right? So you are hopeful that this trade will go in your direction, you are hopeful that it will reverse, you're hopeful that the trade would make you profit, right? But then the real sense is hope is not a strategy. I've not seen where you are learning how to trade and they tell you hope is a strategy. So many a times you just take a trade and it is going against you. My brother, my sister, my trader, you are supposed to lock in your loss, right? The first thing you should even consider when taking a trade is your loss factor. Am I willing to risk this amount? Am I really willing to lose this amount first before even thinking about the potential profit, right? So if you are holding on to greater losses, adding more liquidity to your entries and you hold to hold that position with the hopes that it will recover and give you more profits. You are using hope as a strategy. And guess what? You're going to keep blowing that account. Another emotion is overconfidence. That's why you see people having screenshots here and there on the internet, right? Because I flip $5 to $10,000, they do it, put it online, overconfident. So everything that has this winning streak in their strategy whereby they have consistent back-to-back wins. So many a times it makes some of us get cocky, right? Makes some of us feel we understand the market. Makes some of us feel we know what the market is to do per time. Meanwhile, the market is always right. You, on the other hand, are the one who is wrong. So once you are overconfident and you feel this trade will go where it will deliver this, will deliver that, what happens next? You over leverage. So a trade that you're supposed to risk, let's say a lot size of zero point 0.5 on that trade or one standard lot, but because of your confidence level and you feel now nothing can go wrong on this trade, you can use 10 standard lots or 5 standard lots, which is exposing your account to greater risks, which will eventually, if that trade goes against you, all the profit you've accumulated over time will just thin air. Now I'm going to be telling us how to create a mental discipline, right? So that we can stay longer in the market, we can preserve our capital in the market, and will not allow emotions make us do things we are not supposed to do. And the first thing is to have a structured trading plan. Now, a trading plan will save you a lot of guesswork. A trading plan will save you a lot of had I know. A trading plan will save you a lot of I would have entered maybe if I'd been in this trade, because once you trade your trading plan, you cannot go wrong. So, for example, your trading plan tells you that you trade only the London session. What are you now doing in the New York session? Why are you on the chart looking for opportunities during the New York session? The trading plan says you should trade only the New York session. Why are you awake during the London session? Why is your laptop open during the London session? Of course, you can be preparing against the New York session, but you are not to look for entries in the London session. If your trading plan says you should trade the London and the New York, that is when you should be looking for entries, right? So the trading plan will tell us when to enter the markets, what to look out for before we enter the market, and the frame we are looking at, the context and our entry pattern. Entry and exit pattern is all part of the trading plan. So you need to have a structured trading plan based on your trading strategy, right? So today I'm not jumping because I'm using an indicator today. Tomorrow I'm seeing ICTs making sense. I'm entering ICT. Next tomorrow I'm seeing this structure or that structure or this and that making profits for people, and I'm just jumping here and there. So if I have a trading plan, I stick to it whether it is making profit now or not, because of my back testing, and I've had more confidence in my system. So I know over a period of time I am profitable, right? So you should have a structured trading plan. Next is to have a risk management role. Now, I know all of us are in the game for the money, right? So if you're in the game for the money, you should know that there's a factor called risk. So you should try to keep your risks small, right? So you have enough time to play in the game. If you over leverage, you're out quick. If you take multiple trades, not following your trading plan, you might hit profits here and there, but at the end of the day, you're not even growing as a trader, right? So the aim is to become consistently profitable, and we can only do that with a strategy, a system that is being followed through to the latter, right? So I always say that we should trade our trading plan like a robot without emotions. Of course, we have emotions, but once you see your setup and your frame is the same and it is going in line of the high time frame direction or whatsoever you're using, just execute. Execute. And each trade is independent of the previous trade. So if I have a winning trade, the last trade I took, I should not say, okay, because I've won maybe 1:3, I cannot leverage 2% from the win I had last. That is not a risk management approach that you should take. But because I've been having series of losses, I will not like, okay, let me change my system. This is not working because over time I know that it is working. So even if your system is working 50% of the time, you are good to go, right? Now, the one people don't talk about is journaling. You need to journal your trades. And when you're journaling your trade, you need to consider a lot of other factors like what your system is. You write it out, even if you know it, just still write it out. What you're thinking before you enter the trade, right? So I've seen this and I've seen that, which means my entry is confirmed. Price came back to my point of interest and it is going to the next point of interest. So I'm entering this trade. The time I'm entering, maybe London, maybe New York, maybe there's a specific time by 9 a.m. or 10 a.m. or 7 a.m., whatsoever the time is, you indicate it there, right? So once you enter the trade, how do you feel during the trade? So after thinking of what you were feeling before you enter the trade, how do you feel during the trade? So if you are on edge, you're not okay, or you are feeling like this was a bad trade, you have already entered the position. Should I break even? Should I not break even? Those emotions. And what do you feel after the trade? Was I stopped out? Did I hit take profit? So those things are emotions you should consider in your journaling, right? Not just writing trade one, win, trade two, lose. Now, what are those emotions surrounding those trades? So when you have the journaled and they are all good to go, when you're coming back, maybe over the weekend to review your trades for the week, or the trade for the month, you can now get better insights on what you did wrong, what you did not do wrong. So the days probably your emotions were out of place and you maybe hit take profit, and you see over a period of time those trades you take during those sessions or during those time that you're not really okay with yourself, you're hitting losses. What do you do next time you're taking a trade and you're having those feelings? You avoid those trades, even if it is in line with your strategy, right? But because over time, once you have that gut feeling within you, you lose trades or you lose most of the trades, you then decide not to take those trades. So you have to take those trades that you, your body, your soul, and your spirit is okay with, and they are not on edge. Now, many traders don't want to accept losses in trading. I don't know. You want to make money and you're not willing to lose money in the forex market. Maybe it is what has been stated on the internet and people are already always showing profit and nobody's showing losses, or most people just showcase their profits and they're not showing losses. So beginner traders have this mindset that if I enter this game, I'm going to be all about the profits, right? So um, you need to accept that loss is a part of the game. Making losses is part of trading. Making losses is part of being a profitable trader, right? So you cannot be a trader and don't expect to have losing trades. So you have every strategy has their winning streaks, they have their losing streaks. So you should be comfortable making losses. You should also have it in mind that trading is a probability game. So one outcome or one trade does not determine the whole of your entirety as a trader. Making a loss today does not mean you're a very bad trader. Making a loss today does not mean you're a very, very bad trader. And some people say trading is not for me. Well, maybe it's not for you, but surely everybody can learn trading and everybody can be a good trader if you have this understanding. So since it's the probability game, probability works in your favor over a series of trades over a period of time. So after taking 10, 20 trades, probability works. So you can be 50% up wins and 50% down losses over a period of 10 trades or 20 trades, not just that first trade or the second trade, right? So understand that trading is a probability game. Also, you need to also consider when to take a break from trading. So because I'm having series of losses, the tendencies of me trying to revenge trade is very high. So once I have those losing streak, I take out time from the market. I just chill, do other stuff that I like doing, and stay up the chart, clear my head, and come back. So once you are faced with series of losses, you should know the time to go on a break. You should understand that trading is here forever. So you can always come back. But once you are back with a clear mindset, you can always make your profits back and recover your account. But if you still insist that, I want to revenge trade, they've taken my money, I want to get it back, that is what they want. So that you are just being irrational and your emotions all over the place and you make decisions that would go contrary to your trading plan and to your system. With that, you lose money. I hope you find this insightful. And the next video, we'll be diving deep into more psychology stuffs that will help you better your trading and stay disciplined and focused. Cheers. See you in the next video.